Art, let me start with you. We're trying to figure this out. The investing world is trying to wrap its head around ChatGPT, but you've been using AI for years to pick stocks. I think since 2017 you've had this ETF. So tell us what's the similarity between you and ChatGPT. What is the difference? And is ChatGPT some kind of watershed moment?
Yeah, absolutely. So ChatGPT is an incredible milestone, right? The ability to generate AI. The difference, though, is in the knowledge base and how they're, and so, for example, right, ChatGPT knows a lot about a lot of things, right? But if you ask it to put together a portfolio or anything highly sophisticated or technical, it's unable to do so. So that's really one of the main differences is we've focused and applied AI specifically to understanding the critical signals in the marketplace and went very deep, where ChatGPT is very broad in nature. But the interesting thing is at the heart of both what we're doing, we've kind of attacked the problem in a similar way from a technology standpoint. We've built a convolutional knowledge graph, which is what ChatGPT is using, which is a graphical database that unites structured and unstructured data and connects relationships between different concepts, entities, and events. And we're using these deep learning models to make predictions. And then these predictions, right, are measured. And then the information flows back to the powerful knowledge graph, which is probably one of the most powerful tools in AI at this time. And so it will continue to get better and improve over time.
Yeah, it's a good point. So, Bill, let me turn to you. ChatGPT hit something like 100 million users in 2 months. I'm just trying to figure out what's the effect going to be on businesses, not just finance, but business in general. We had talked about this earlier. The iPhone launched an enormous app business worth hundreds of billions of dollars. Is this going to happen with ChatGPT? Is it going to launch a multi-billion-dollar businesses, or is it going to lead to a bunch of layoffs?
I think this is definitely not a fad, and I would argue that this is, as you just said, it's kind of an iPhone moment. And I think as the field of AI continues to advance, we're moving into kind of uncharted territory. And artificial intelligence is certainly the buzzword in the market now, really thanks to a wave of sort of viral applications such as ChatGPT, which have captured the public's imagination. And this tool and many others demonstrate really the quantum leap that's taken place over the last few years in AI and what it's capable of. When we launched Robo nearly a decade ago, we had a view and vision that we were on the cusp of ubiquitous automation. But fast forward to 10 years later, we couldn't be more convicted. And this wave of innovation, I think, is set to hit the world of business and really redefine what's possible. As Art kind of talked about, the most transformational companies are those that are going to be able to achieve sort of real-time AI. And so all AI is powered by information data, and real-time data is the most valuable of all. So if you have the ability to synthesize and understand the data, you're going to be pretty successful.
So, Art, I'm going to go back to investing. What's the implications for investing? So you've got this AI-powered ETF. It picks stocks on a proprietary model, but when I'm talking to you over the years about this, it uses pretty conventional signals, it seems like, fundamental signals, technical signals, headline frequency. I do that. So what does AI do for investing that human analysts can't do?
Yeah, so you're absolutely right. So the signals are in some ways traditional, right? So it signals across fundamentals, macro, technical, news, right? But the critical thing is to understand which signals are critical for which companies. So for example, GameStop is a top 10 holding, right? So for GameStop, a critical price driver might be something like news and social sentiment, right? Headline frequency, where another top holding would be Citi, for example. And it uses, maybe the critical drivers are inflation, right? And interest rates. And so we're trying to understand, right, what are the critical drivers for each particular company? Now, the beauty is, right, is that all of these different companies are connected in very complicated ways through different value chains, right? They're customers, there's different themes like metaverse and AI. And so what AI can do is it's more efficient, right? It's faster. So instead of having 10,000 research analysts and them together trying to put together the picture of the market, right? What AI can do would be like 10,000 virtual analysts, and what is known by one analyst can be known by all analysts instantly.
So, I mean, this is an important point you're making here. And maybe, Bill, you can respond to this. He just said 10,000 analysts. Instead of 10,000 analysts, you got, you know, ChatGPT or AIEQ. So there's hordes of people making stock recommendations on Wall Street, picking stocks. Is this a threat to their livelihood?
Yeah, I don't know, Bob. I think it's going to take time for this to play out. I certainly think that if you're able to remove emotional human decision making, it probably is going to be additive over the longer term. I mean, active management struggled because people sell what works, they sell what doesn't work, and they're stuck with what's in between. So the extent that we can kind of eliminate some of the noise and you know, take the emotion out of investing. I'm not an expert on this, but I think that there's probably a lot of opportunity in the years to come as the technology gets more and more refined, and obviously the data can sort through various, you know, correlations, and obviously there's certain factors that work in the market and then certain factors that don't. And the important thing is not to look in the rearview mirror when investing, but to look forward. So the extent that these technologies can help you sort of navigate what's coming, I think is going to be very disruptive.
Yeah. Art, I want to drill down a little bit more on how you pick stocks, or how your AI picks stocks. And I look at your largest holdings here, Novavax, AIG, Las Vegas Sands, AbbVie. I don't particularly see a common thread, but maybe that's the point. It's not a tech fund. It's not necessarily a momentum fund, although it uses momentum. Explain how this program picks stocks.
Yeah, absolutely. So it's more of kind of a bottoms-up approach, right? What we care about is the critical signals for each one of these, you know, individual companies. And so we extract these signals from various data sources, millions of global news articles, social media posts, research reports, TV transcripts. We combine this with other kinds of data, economic data, market data, and financial statements on over 5,000 publicly traded companies. We then use all this data and signals, right, to make price predictions on the entire universe, right, to see where the stock is going. And then the 140 names that have the highest potential of appreciation or the highest expected returns, those end up going into the portfolio. And then as we walk forward in time, right, those price predictions are measured against the actual returns. And then the system then learns from those predictions so that the subsequent predictions can be even more accurate than the previous ones.
So this all sounds great, but how do I measure this? I mean, what benchmarks do I measure it against? Do I measure it against the S&P 500? How do I know you're doing better or not better? You know, get my point here?
I do. So it's a total market approach, right? So it looks at 5,000 different companies. And it's having an exceptional day today, and it's outperforming the broader market, you know, in 2023 here. But the thing with AI and machine learning, Bob, is I think we're not looking at it the right way, right? You're talking about past performance, right? The beauty of this is that we're just in the first inning. These systems, right, AI, machine learning, it's continuing to evolve, right? It's going to improve. So whether we're talking about ChatGPT, right, your iPhone, AIEQ, its best days are still ahead of it.
But we're in an arms race, right? I mean, that's sort of the problem I have with this. It used to be, you know, we used to try to find the best analysts 30 years ago, and now everybody's got the best analysts. Information is very evenly distributed. So suppose we get AIs that pick stocks, they're all going to be, there's an arms race of all AIs. I guess the question is, I'm going back to, why don't I just buy the S&P 500? I'm not sure what I'm getting when I do this. I love the idea around the concept of doing this because the AI can see stuff I can't see. I made fun of this earlier with you about, you know, I can pick stocks, I can do fundamental and technical analysis, but what I can't do is surf through millions of pieces of data and find the signal in the noise. I might likely miss that because I can't analyze it as much. I'm just trying to figure out where does all of this sort of go. If we all have an AI, you know, stock picking assistant in the next 10 years, Is that really going to lead to anybody's outperformance, or does it? What are we looking for at that point?
Yeah, so not AI is created equal, right? And people have different approaches on AI, right, and how to use it, and different technical structures, right? As I mentioned, right, our technical structure using things like knowledge graphs and deep learning models can be very different than the way someone else kind of approaches the problem, right? So you want to make sure when you're investing, right, that you're investing with people that have done this before, that have deep expertise and deep knowledge in this space, right? So that way you're getting the best AI possible. And that's why we've partnered with some of the best companies out there like IBM Watson to ensure that we've got the best AI and that we're unlocking these investment opportunities for investors. And I love the ETF format because anybody can buy it, right?
Yeah. Right. And how often does AI EQ rebalance?
So it's data dependent. It's an active fund, and it can rebalance daily. And I would say most days it probably does.